You didn't fire a missile, you didn't invade a country, and you certainly didn't ask for a war in the Middle East. But now, your grocery bill is higher, your gas tank costs more to fill, and your electricity bill, it's creeping up too. So what's going on? In 2025, tensions between Israel and Iran have exploded into a full-blown conflict, and somehow it's your wallet that's taking the hit. The news headlines talk about drones, nuclear sites, and geopolitics, but almost no one is talking about the quiet chain reaction that starts in the Persian Gulf and ends in your daily life. In this video, we'll break down exactly how a war thousands of miles away is draining your paycheck, and what that says about the fragile system we all depend on. What's happening in the Middle East? Let's zoom in on what actually happened. In early 2025, after months of rising tension, Israel launched a wave of airstrikes targeting Iran's suspected underground nuclear sites. These weren't symbolic hits. They were direct, strategic, and aimed at crippling Iran's nuclear capability. Iran responded swiftly, not just with missiles, but with a threat that shook the global economy. Any oil tanker passing through the Strait of Hormuz may be treated as a military target. Why does that matter? Because the Strait of Hormuz is not just some stretch of water. It's the beating artery of global energy. Every day, nearly 20% of all oil traded worldwide flows through this narrow passage between Iran and the UAE. When that artery gets blocked, or even threatened, the world holds its breath. Shipping companies instantly rerouted vessels. Insurance premiums for tankers doubled overnight. And oil traders, they didn't wait to see what happens. They reacted. Within 2 weeks, Brent crude, the global oil benchmark, surged from $76 to over $110 a barrel, a 44% spike. That kind of jump doesn't just worry economists. It triggers alarms inside governments, central banks, and most importantly, your household budget. Because oil isn't just for cars. It fuels trucks, planes, factories, power plants, cargo ships. It's embedded in everything. And when oil goes up, the price of everything goes up with it. This war might be thousands of miles away, but the economic shockwave, it's already knocking on your front door. So how exactly does a distant conflict drive up your daily costs? Let's unpack that next. How does this impact your daily life? So how does a conflict between two countries thousands of miles away end up raising the cost of your dinner, your commute, and your electricity bill? Let's break it down. First, gasoline. When global oil prices surge, fuel stations don't wait around. They pass the cost on immediately. In Shanghai, the average price of gasoline jumped 20% in just 10 days. In New Delhi, long lines formed at petrol pumps after overnight price hikes. In Berlin, commuters started switching to public transport to cut costs. For families that rely on cars to get to work or drop kids at school, this isn't a minor inconvenience, it's a real financial squeeze. Second, transportation and logistics. Think about everything you buy: food, clothing, electronics. Almost all of it travels before it reaches you. Higher fuel costs, more expensive shipping. More expensive shipping means higher prices on store shelves. In China's coastal cities, logistics companies are already raising delivery fees. Even major online platforms like JD.com and Alibaba have issued statements warning of potential temporary price adjustments due to fuel volatility. Third, electricity and manufacturing. Many countries, including China and India, rely on oil or natural gas for part of their power generation. When energy costs rise, factories feel it first. Some reduce production hours, others raise prices. In some cases, companies delay or cancel exports due to increased costs. For everyday consumers, this means your electricity bill goes up, products you buy get more expensive, wages still the same. That's how a war you didn't vote for starts eating away at your paycheck. And here's the hard part. These effects don't hit everyone equally. Wealthy families might not notice a $15 rise in energy bills, but for low and middle-income households, that's food off the table. Coming up next, Let's talk about what happens when inflation spreads and why it's the poor who always pay first. Inflation is back, and no one is safe. So the price of oil is rising, and now your gas, food, and electricity cost more. That's bad enough. But the real danger isn't just higher prices, it's what happens next. It's called second wave inflation. When energy costs rise, companies have two options: absorb the loss or raise prices. Guess which one they choose? Suddenly, your local restaurant increases meal prices. Your favorite brand of laundry detergent shrinks the bottle but keeps the price. And delivery fees? Baked into everything. This ripple effect leads to broad-based inflation, which means everything gets more expensive, even if it has nothing to do with oil. Let's take China as an example. Small businesses in cities like Guangzhou and Hangzhou report 15 to 20% increases in monthly operating costs. Some are cutting staff. Others are raising prices just to stay alive. Across Asia, inflation expectations rise, meaning workers expect higher costs in the future and demand higher wages. But here's the catch. Wages don't rise as fast as prices, and when they do, central banks often respond by raising interest rates, making mortgages, credit cards, and business loans even more expensive. Globally, the pattern repeats. In the US, inflation was just cooling off. Now, the Fed is talking about pausing rate cuts. In Europe, fuel-driven inflation threatens economic recovery. In emerging markets, weaker currencies make imported goods more expensive, worsening the pain. And through it all, guess who gets hit hardest? Not oil CEOs, not hedge fund managers, but the teacher in Shanghai, the factory worker in Jakarta, the delivery rider in Manila. When inflation hits, it doesn't hit like lightning. It creeps, quietly, relentlessly. And it always starts with energy. Coming up next, let's look at who's actually making money from this chaos and why some people see war as a business opportunity. Who's making money from this? Let's be honest, when global oil prices spike, not everyone loses. Some people and companies make a lot of money. First, big oil. Companies like ExxonMobil, Chevron, and Saudi Aramco saw their stock prices soar the moment conflict broke out. In China, Sinopec and PetroChina reported double-digit profit growth in just one quarter, thanks to rising crude prices and tight supply. Every time oil jumps a few dollars per barrel, these firms rake in billions, even as ordinary people struggle to fill their tanks. Second, defense contractors. While missiles fly, stocks like Lockheed Martin, Raytheon, and Northrop Grumman quietly climb. Why? Because wars need weapons, and governments start signing new military contracts fast. It's no coincidence that arms stocks rise whenever conflict headlines dominate the news. Third, energy traders and hedge funds. If you bought oil futures in January, you're probably smiling right now. Commodity traders thrive on volatility, and war creates the perfect storm. Uncertainty, shortages, panic pricing. Some hedge funds even bet on supply disruptions, making money when the world becomes less stable. Meanwhile, the average person is cutting back on food, skipping vacations, and watching electricity bills creep higher each month. This isn't conspiracy, it's just how the system works. In every crisis, there are winners, but they're rarely the people paying the price. Coming up next, let's see how history keeps repeating itself and why these global shocks never seem to go away. History doesn't repeat, but it rhymes. This isn't the first time oil and war have collided, and it won't be the last. Because every few years, the pattern returns. A crisis flares up in one part of the world, and suddenly the entire global economy is holding its breath. Let's rewind. 1973, the Arab oil embargo. Middle Eastern countries cut off oil exports to the West. Oil prices quadrupled in 6 months, triggering inflation, recession, and fuel rationing across the US and Europe. 1990, Iraq invades Kuwait. Oil spikes. The Gulf War begins, and so does a global market panic. 2008, right before the global financial crisis, oil hits $147 a barrel, partly driven by speculation and geopolitical tension. 2022, Russia invades Ukraine, supply chains freeze, Brent crude surges past $120, inflation returns worldwide, and central banks scramble. And now, 2025, another conflict, another price spike, another wave of everyday people paying for something they never asked for. Why does this keep happening? Because the global economy still runs on fossil fuel and fragile trust. We act surprised every time a war rattles the markets, but we've built a system where instability in one region can shake the entire planet. That's not resilience, that's exposure. And the people who suffer most aren't the ones launching missiles. They're the ones waiting in line to buy bread, medicine, and fuel. History doesn't repeat itself exactly, but the consequences always seem to fall on the same people. Coming up next, let's ask a harder question. If the system keeps breaking every time there's a crisis, was it ever really stable to begin with?
So here we are again. A war breaks out, oil prices surge, and somehow it's the teachers, the drivers, the nurses, the everyday people who foot the bill. They're not the ones making foreign policy decisions. They're not betting on oil futures. They're just trying to get through the week without their costs doubling overnight. The world economy is often described as interconnected, but maybe the better word is interdependent, and dangerously so. Because if a single missile strike can send shockwaves from Tehran to Toronto to Tokyo, then maybe the real problem isn't the war. It's how fragile the system has become. So here's the question. Is this the price of globalization, or is it a design flaw we refuse to fix? Let us know what you think in the comments. Do you feel the system is working, or are we all just one crisis away from collapse? And if this video helped you see the world a little more clearly, subscribe for more explanations like this, simple, global, and honest. We'll see you in the next one.